Welcome to Money Talks. I'm Genevieve Westcott with the latest financial news from around New Zealand and around the globe. In this edition, our agriculture industry is thriving. Prices for our commodities are at historic high levels, whether it's dairy, lamb, or wool. Asia can't get enough of our delicious products. Its appetite appears insatiable, and the rate of global population is growing. We've got plenty of fresh water, a safe biosecurity environment, and plenty of countries around the world chasing us for free trade. So how come we're not powering ahead? Don't touch that dial. You'll find out shortly. All this and much, much more coming up. But first to the markets and the movements of the month of May with all the latest from ASB's Rural Economic Update. Joining us is author and go-to guy, ASB Rural Economist James Shortall. James, tell me about May. What's going on?
The go-to guy.
The go-to guy. Your finger's on the pulse. How was May looking? What did your report discover?
Well, I mean, I think May's been quite an interesting month for commodities, particularly because, you know, through the early part of May, then commodities really took a tumble. Oil prices fell $10 in a day. That's unheard of. So there's been quite a few changes, and we've also seen a lot more focus back on the European continent, and potentially we may see some focus on the US too.
Let's talk about oil now. Why did the prices go down so much so fast?
Well, to be honest, there's no real reason why they did, other than you know, we've seen quite a bit of speculation. Prices have lifted quite strongly, and perhaps they just got a little bit overcooked and they've come back. But it's interesting also to note that some of the big financial institutions out there, you know, they have the quite complex computer models. So as soon as prices fall by quite a bit, then there's a flurry of activity of sell, and that's potentially what we did see over that particular day. Yeah,
and we haven't seen oil prices fall like that since what, the global financial crisis?
Well, yeah, even at that point in time, we didn't see oil prices fall by, you know, this is a significant fall, and we also saw other commodities fall off the back of that too.
Interesting. Big OPEC meeting tomorrow, and Saudi is already signaling that they may be loosening up their supply. What effect might that have?
Well, more supply, it has an impact on the market, and you know, if we don't, we're still seeing, you know, demand, particularly out of some of the big economies, still pretty flat at the moment. So, you know, it could have an effect on prices, and prices could come back, which, you know, might be good news for farmers.
Your May report suggests that a lot more focus of the world now is moving into the U.S. and what's happening or not happening there in the U.S. economy. Tell me more.
Well, I mean, it's an interesting point, because we've seen so much focus come back onto the European continent, but nobody really seems to be focusing too much on what's happening in the US just yet. Even though US dollar is very low, very weak against most currencies, you know, the US economy is still pretty weak. Their debt's at sky-high levels. You know, we're starting to hear talk that the Chinese are pulling some of their money out of the US. So, you know, if Europe sort of sorts their stuff out, and the media start talking about the US, then we might see quite an interesting dynamic change.
Latest US unemployment stats out, now up to what, 9.1%? No good news fast coming there.
No, definitely not. And you know, looking at some of the recent reports and housing stats, you know, it's still pretty ugly, and you know, there probably just hasn't been quite as much of a pickup in the US recently as we've potentially seen it. And equity markets are probably quite a good signal of what has been going on, and potentially what the future might hold. And equities in the US have declined each of the last 5 weeks.
Okay, let's talk about the dairy sector. In May, what patterns did you see? Tell our farmers, what can they expect?
Well, I think, you know, prices are still looking good. Commodity prices are looking good. But, you know, of course, May, that was the month when we saw the big new Fonterra payout announcement lift to a historic high. But also the indications for next season are also looking really good. So, you know, I think the dairy payout and the dairy industry are looking really good at the moment. And, you know, farmers can take the opportunity to bask in the glory and take the opportunity to get some really good payouts.
And structurally, you're suggesting that you believe dairy has moved to a whole new high and it ain't going back fast.
Well, I think yeah, dairy prices have lifted to a new structural high, and you know, that's potentially, we've also seen the New Zealand dollar unfortunately lift to a structural high as well. So, you know, dairy prices, we've seen an increase in demand out of the developing economies. That's not going to change anytime soon. I think over the next couple of years we're going to see you know, minimal, well, we're going to see some supply increases, but those supply increases are just not going to match demand out there. So, you know, whereas previously we might have seen, you know, commodity prices around the $1,800 to $2,000 per tonne, now we could see them $3,500 to $4,000 per tonne. So, you know, that's the structural increase, and that's going to be good news.
Thanks, James. Coming up after the break, big ideas to become globally great in the hungry world out there. What's holding us back? High debt levels, poor integration with customers, and outdated farm practices, not to mention our inability to talk frankly about foreign ownership and genetic engineering. That's all ahead as experts ask our aging farming population, where do they want to be 50 years from now? But first, as we head to break, answer this in our Farmers' Facts and Figures quiz. How much oil is traded globally on a daily basis? Find out when we return. Stay with us. Welcome back to Money Talks. Just before the break, we asked you, how much oil is traded globally on a daily basis? The answer, $245 billion of oil trades every day somewhere in the world. And speaking of the world and our place in it as an agricultural nation, here's a must-read report for anyone wanting to find out the latest challenges and opportunities facing us. Hot off the press is this 72-page report put out by KPMG. Called Realizing Global Potential. It's based on extensive interviews with more than 80 agribusiness industry leaders from across New Zealand. Joining us now is KPMG's head of agribusiness, Ian Proudfoot, a driving force behind this wealth of material. Ian, let's talk. What did you find out having done this massive report that surprised you?
I think the key message that came out of it from our perspective was the great opportunities that are there and the consistency of view. You would think when you're talking to 80 people, you're going to get quite a diversity of view, but I think everybody understands what needs to be done. And the important thing is some of those conversations need to get going sooner rather than later if we're going to actually see where we want to be in 20 or 50 years' time.
Now, interesting, you say that we tend to worry more about the things we can't control than the things we can control. What do you mean?
Well, I think the best example of that is the exchange rate. And, you know, so much time is spent talking about the exchange rate. But if we want to have a free-floating currency, then the exchange rate's going to do whatever the exchange rate's going to do. And, you know, James was talking before the break about the level of the exchange rate currently and its all-time highs and the structural changes that are occurring. Let's stop worrying about that and work out how we make our businesses great in the current environment. And that's probably where I think we should be really focusing.
James, is that kind of a Pollyanna wish? I mean, is this at all possible, do you think?
Oh, no, definitely. I mean, I think I totally agree. It's, I mean, if we talk about the currency in particular, then it's the reason why we're seeing such a high currency is because we've got such high commodity prices, and that's a good thing. So the two things are going hand in hand at the moment. But you know, I think it would be great if we could just concentrate on the things that we can control, because there's so many things that farmers can't control that impact on their business.
Ian, you said in your report that basically the industry leaders and the top farmers around the country told you that we all have to have 4 very important conversations. Quite simply, what are they?
Well, the key conversations that I think that need to happen, we need to talk about intensification. There's a lot of value being left behind the farm gate in terms of less than perfect productivity. So how can we make our farming more intensive to get more productivity, because that will create more value. But that drives into a conversation about genetic technologies and the adoption of those technologies. It's a difficult issue, it's a very emotive issue, but it's one that I think we need to be mature as a country and have that conversation sooner rather than later.
But don't you say in your report that if we don't get on board with more of this quickly, we could be left behind the rest of the world?
We definitely could be left behind if we're not aware of those technologies. But I think the important thing is we need to understand what New Zealand wants to be in 50 years' time. And, you know, there could be a very strong argument that taking a more organic, biological approach is the right course for New Zealand, and we really focus on a niche production. But you know, that means there needs to be some big changes, because that will have huge implications on the dairy industry.
But like organics, James, couldn't GE-free food, if you like, couldn't that be a great brand for us in the world?
Potentially, but you know, right now, I guess that's the issue. Maybe that's what what Ian's getting at. Right now, we don't necessarily get the return out of those products and the organic foods. I mean, people wanted, you know, at the high-end customers they want to buy organic, but they don't want to pay us anything more for it, and it costs a lot more to produce it. But you know, if in 50 years' time, if that's really where New Zealand agriculture is going to go, and we're going to get paid more for it, then let's get on that journey. You know, that might be the way. That might be the way to go, but right now we just don't know.
Another conversation that we're not having very well is about foreign ownership. And some interesting things came out of your study. What did you discover?
Well, I suppose the key thing, the common theme was the concern that people were expressing was around who's owning the processing companies rather than who's owning the land. I think most people are pretty comfortable that land can't be taken away, and providing that the product coming off the land is going through the New Zealand-owned processing sector or partly New Zealand-owned processing sector, then the value accretes back here. The concern was if people can start bypassing our processing, that creates a problem. So I think what people are really suggesting is we need foreign equity. There's no question that we've always had foreign equity in New Zealand since the British arrived back in the early 19th century. So it's a matter of ensuring that we get foreign equity on a real co-investment basis that brings value in terms of market access, it brings innovation, it brings new technologies, and it brings the money we need to develop processing assets here.
Of course, we've seen horrible examples just across the ditch in Australia with processing plants there. Is it realistically possible that that sort of thing could happen here, James?
In terms of the bad news stories, I mean, it potentially could be. It would have to take some quite close management, I think, in order for it to happen. But the real risk is, you know, we do need capital in. We do need additional technologies to grow our business on the global scale. But you know, potentially if you get a footprint, then you can expand from there.
Australia's the real warning here, to be honest. You know, they actually didn't worry about this, and over the last 2 years, you can look at how a large chunk of their processing sector has gone into overseas hands. They've now put the gate up and are having a process of reviewing their strategy and working out where they want to be. But the horse has already bolted. It's interesting, just last week, the rice growers situation, they chose not to sell to the Spanish, which is something that, you know, 6 months ago you wouldn't have conceived that they wouldn't have accepted a very, very good offer from the Spanish for their shares in rice growers. So as we look at it, New Zealand's still got control of most of our assets. If we understand the importance of those assets and work out how we can co-invest smartly, then we get all the benefits of the foreign capital while retaining that value accretion in New Zealand.
Another big problem, James, that comes out of this report is that we're simply not getting younger people going into the industry. How much of a concern is this from the people you talk to every day?
I think it's, well, I mean, I think people are really aware of it, and I think it's a major concern going forward, and succession planning for existing farmers, especially in particular sectors, because there's limited opportunities to pass the farm on to the younger generation, but also actually getting the younger generation, the ones that are, you know, eating the new foods and using the new technologies, actually into some of the management positions and in the boardrooms to discuss some of these new ideas and where things are going, you know, in 50 years' time. I think that's some of the key things, and not only, you know, for us here in New Zealand, you know, some of the it's not only about getting people into agriculture, but it's getting people excited about marketing agriculture on the global stage, and you know, getting graduates not talking about how they're going to find the new technology, but or the new computer, but perhaps how are they going to market the new meat product onto the global stage, or the new dairy product onto the global stage, and how they're going to do that.
How is it possible that a country that relies so much on agriculture is doing so shockingly badly with young people, Ian?
Well, it's not in the curriculum. And so if you're in an urban school, you're very rarely finding out anything about our agricultural economy, yet it drives the economy. One of the issues that came out, one of the suggestions that we've reported in the report, is around how we're actually directing student funding and maybe making student funding more targeted towards those areas that have economic value to New Zealand and where we need people, because there's jobs here.
When you say more targeted, what are you really talking?
I suppose we're talking about how interest-free student loans. Do you provide full subsidies to courses that don't have economic value? That's fundamentally the question that's being asked. And a large number of the leaders we talk to would probably have a view that we should be much more targeted in only fully funding courses that have economic value.
Now, interesting, you organized some seminars with ASB Bank. Look at you, a couple of bookends here. And you talked to corporate farmers as well as the industry leaders. They actually had different ideas about what would work for agriculture. What were the differences that surprised you?
The biggest difference was around foreign land ownership. And for the farmers, it's clearly a very much more an emotional issue, and attachment to the land is very important to them. And, you know, clearly we were talking to some of ASB's largest corporates at one of the sessions that ASB ran. And the message we got back in asking the question was they are much more concerned about what happens with foreign land ownership, I suppose, because the issue also flows through into what it does to land values down the track.
Now, one of the solutions that Ian Proudfoot and his gang at KPMG are pushing is something called co-investment with foreign ownership. What's your understanding of that, James, and how well do you think that might work?
Well, I mean, I guess it's a good way to getting foreign ownership or foreign capital here into New Zealand and to potentially going offshore together, and so you can get joint benefits. So, it's an interesting concept, and one that could be well looked at here for sure.
Yeah, that co-investment concept in relation to land goes a little bit further. What we're talking about there is actually having a structure where if you do co-invest with a young New Zealand farmer, there's an opportunity to get some form of tax break associated with that co-investment. So really what we're trying to say is we need to get young people onto the land, we need to give them the ability to do it. They're probably not going to be able to buy the farm off their parents because you need a huge amount of capital, and the banks probably won't be in a position to be able to lend that straight off. So can we get a partner in? Is there a structure that we can create which gives people tax incentives so everybody benefits from co-investing with a young New Zealander?
The number one issue that you dealt with was biosecurity. This is something everybody across the board is very worried about. The new legislative changes now before Parliament. Tell me about those and tell me what your concerns are.
Okay, it's the government industry agreements are the thing that came up most often in biosecurity. The question there is biosecurity a public good or a private good?
What's your view?
Public good.
It's a public good.
I think overall. I think because the risk of a failure in biosecurity to the New Zealand economy would be so significant it could be catastrophic. And in a situation where we're already having to borrow heavily to fund the rebuild of Christchurch, to run the risk of a biosecurity failure happening is something we just can't afford to take. So I think having industries involved in the management of biosecurity, making some of the policy decisions and potentially funding beyond a base level is something that could be a positive thing to do, and that's where, if the GIAs work properly, could be seen. But I think the government need to fund that base biosecurity.
And one of the solutions you've come up with is a biosecurity levy. Do you think that could work, James?
Well, I mean, if we're going to get, it's a real issue, and if we're going to get more money involved in it, then definitely it's a viable issue.
So really what with the levy's talking about funding research into activities of looking where the future threats are. So fruit fly in Australia, what happens if we get fruit fly in New Zealand? How do we address it? And what does it look like in a New Zealand environment? Let's get the research done up front, so if something does happen, we're not caught.
Yeah, and we've had a couple of recent scares with kiwi fruit, the PSA disease, and also the oyster beds. 50% wiped out in the North Island, I believe, because of a kind of a herpes.
Yeah, so it shows they're real threats, and they're just in the last 6 months, both of those threats have come through. So we can't afford to be light-handed on biosecurity. We've got to continue to have a no-tolerance approach to it. And if we do, it gives us a competitive advantage. These three states, when you look what's happening in Germany, is a real benefit to the country. Now,
interesting too, James, one of the things they want are better skills around the boardroom tables, smarter directors, international directors, directors making more money. Don't they make enough already? Talk to me about that.
I'll let James talk.
I mean, I think there's probably two facets there. One on the farm gate, and that's something that we've probably been pushing, and I think KPMG, that's why we've had them involved, talking about governance on the farm, because we're getting some big farmers and dealing with complex issues. It's good to get other people's opinions involved on the farm too, but also at the processing end, then they are really marketing onto the international stage. I think there would be a lot of value out of having international directors on there to advise them on some of the potential issues and things that they should be considering.
Yeah, I suppose it comes back to our absolute key theme across the whole document is we need to be integrated into our markets. We need to understand what our customers want. The only way we can do that is having real knowledge of people living in those markets every day. So at the board table, that probably means you need a director that's living in the market, sitting around your board table, being able to give you the trends that are happening so that you can respond to those more effectively in your business.
You see, that's the most shocking thing to me, that people in the agricultural industry, if I read your report, it suggests that they haven't figured out WIFM, what's in it for me. That somehow we produce this stuff and just think the world's going to take it, when really it's all about them, the customers. What's it going to take for this message to get through?
I think it's getting through. And, compared to even where we were last year, I think people are becoming much more customer focused. But there's a matter of who is your customer, and we need to understand who the end customer is and have the relationship with the end customer, not have the relationship with an intermediary or a distributor. So if you look at the kiwi fruit model, that's what Zespri does. Zespri owns that relationship with the end customer, but then the logistics may be handled by a whole heap of third parties. But who controls the relationship, who controls the brand, who controls everything about the IP for the product? Zespri does, and that's what creates value back to the orchard gate for kiwi fruit growers.
Thank you, gentlemen. Coming up after the break, Future Proof, what our experts will be tracking over the next 7 days. Wherever they're headed, you should probably be along for the ride. But first, a question for you in our Farmers Facts and Figures quiz. What percentage of New Zealand dairy exports head to China each month? The answer when we come back. Stay with us. Welcome back to Money Talks. Just before the break, we asked you, what percentage of New Zealand dairy exports head to China each month? The answer, 25 to 30% of New Zealand dairy exports are sold to China every 30 days. No doubt about it, it's a major dairy market for us. And now it's time for Future Proof. What's coming up that our experts will be watching? James, how about you?
Well, I'm an economist, so I have to mention the official cash rate announcement, which is on Thursday morning. And I don't think there's not going to be any surprises in that. There's very little chance that we're going to see any change to the official cash rate. So, for farmers out there looking at interest rates, probably short-term interest rates are going to stay low for a period yet. Now,
there's been some activity on the Olam situation. Give us an update.
Yeah, well, it's interesting. I've been following the markets the last few days, obviously, and there's been some speculation that Olam's looking to raise around $600 million, as well as some additional debt. So they're not talking about what they're actually going to do with it, but of course they've been pretty active here in New Zealand and been active in overseas markets. So it'll be interesting to see if they do raise the money and then what they're going to spend on it. But you'd have to say they're expanding.
Here's here's another classic case: capital, capital, capital. Here's a company that appears to be going pretty well. Is the market going to come to the party, or are we going to have to bring in foreign investors? Ian?
Well, obviously, Olam's a Singaporean company, so they are the sort of company that we would perceive as being a great co-investor along with New Zealand agriculture, and are already successfully investing in open country dairy. From I suppose as we look at it at the moment. We need more companies like Olam prepared to invest in New Zealand.
Is it possible that mainland Chinese money could also come into this?
There's a lot of money out there in China. We also think understanding the Indian market opportunity is very important to New Zealand.
Yeah, let's talk about that, because we always talk about China. James, I think it's your fault. You always talk about China, but what about India? Massive markets.
Oh, it's a huge market, and it's a market that already eats dairy. So from New Zealand's perspective, it's a much more complementary market. It's an English-speaking market. It's got a lot of common history in terms of our British backgrounds. So there's a lot of commonality in India. It makes sense as a market to me for us to spend a lot more time talking about India than China, because the opportunities are huge. It's a tough market. It's not going to be easy, but the returns could be huge.
James, what has stopped us from pursuing India the way that we've pursued China?
Probably China. To be honest, because they're the ones that are in the front runner. They're the front runner at the moment. They're the ones that have their economy's been expanding. Rapidly. They've got more money. They've been demanding our products earlier. So the fact that that market opportunity is so massive and has been much easier for us probably has been a key reason. But India does offer us a massive opportunity. There's probably a few issues right now, but in a different way, because we can actually prepare ourselves for how we're going to target it and those specific opportunities that we want to take up. So
from our conversations, one of the things that came out about India is it's seen as a great supply point, because it's actually somewhere you can actually develop facilities to supply other markets. So if we're talking about global supply and the ability to fix a customer's supply for 12 months, India might be an important point in the supply chain for New Zealand companies. So it's worth taking the time and effort to start working on India now rather than wait until we get the FTA in place.
Ian, I'm curious, having authored this massive report now, what would the three things that you would change if you could? If you had John Key's ear right now, what would you tell him to do as a result of this?
I would invest in incubators offshore, so we start understanding what's happening in the market and getting the ideas coming back to New Zealand. I would look very carefully at my biosecurity to ensure that anything that we do doesn't run the risk of creating an incursion. And I would put a lot of effort into ensuring there is a great connection between the rural and the urban communities, and we encourage both to understand each other more fully.
Okay, thank you very much, gentlemen. Thanks to my guests, ASB rural economist James Shortall and KPMG's head of agribusiness, Ian Proudfoot. We love to hear your feedback, so be sure to check out the website. Now, if you want a copy of KPMG's 2011 Agribusiness Report, simply go to this website address, There it is. And to read more about ASB's latest economic update for the rural sector, you can go online to this address. Hurry up, write it down. Remember, next week we'll be at the Mystery Creek Field Days. Be sure to drop by and say hello. And tell all your friends and family that they'll be able to watch us for free on Sky from June 15th through to the 18th as a special Field Days taster of Country 99 TV. That's right, anyone with Sky can watch us for free on Channel 99 Sky from June 15th through to the 18th. Who said there's no such thing as a free lunch? Keep the faith. See you at Field Days.